up, Crypto Warriors? It's Sergeant Crypto back at it again. It is Sunday, the 21st of March, 2021. We are still in the red. We just can't seem to get past that 60K resistance. It keeps smacking us down as soon as we get up to 60K or go a little past it. But we keep hitting that resistance enough, we'll eventually break through. All right. As you can see, everything's pretty much in the red except for a few coins like XRP. They have some news coming out. That's why they're in the green. Stellar typically pumps with XRP, so that's kind of in the green as well. Terra has some news. Theta has some news. And VeChain has some news, all within the last 24 to 72 hours. All right, let's take a quick look at Bitcoin here on the charts, and as you can see, that 60K mark, man, as soon as we get past it, you know, it smacks us down. Well, this was the all-time high, I'm sorry, over here, but smacks us down again. We bounced off around 54 and hit some support at 55, went back up to the 60K mark, got smacked again. Here we go on the 20th, which was yesterday, hit that 60K, and it smacked, and we get continually getting smacked and pushed down past 57.5, and that's where we are currently. All right, and if we take a look at the market cap, we're still finding some support here at the $1 trillion mark for the market cap. See, we bounced off of here back in the beginning of March, on March 9th, and we still haven't been below it. Although we've been smacked down a little bit, we still haven't been below that $1 trillion mark ever since we passed it in the beginning of March, and that's a good thing. We're still finding that good support right about that $1 trillion mark. All right, so let's get into it. Let's talk about these coins that are being added to actual Coinbase, the actual easy app for beginners to use, the actual app that robs you because of the high fees. But again, more adoption and great news for these cryptocurrencies being added to Coinbase. Although they've been added, they had the Coinbase pump temporarily, but not much of a pump afterwards, right? So here it is. We have Cardano. They're on Coinbase, actual Coinbase, not just Coinbase Pro now. They were added to Coinbase Pro on Thursday, and then Friday it was already on Coinbase. I tested it out myself and got some, just like $5 worth on Coinbase. What else is on Coinbase? One of my other favorites, that's Matic. Matic is actually on Coinbase itself, and that's, again, great news. I still don't understand why Tezos isn't on regular Coinbase. It's only on Coinbase Pro. I think it has something to do with the fact that they are like a staking coin, maybe, and they got to probably get approval from, you know, the New York regulators, so to speak. But yeah, Coinbase having added a ton of new cryptos. Great news again for the adoption and the easy access to these cryptocurrencies for, you know, people coming into the space. And so, congratulations if you were holding any of these cryptos over here. Loopring is a good one. Kyber Network, Synthetics, like there's a bunch on here that I really only thought was on Coinbase Pro. But yeah. Next, this is another great adoption news. This is Scaramucci. He's coming out and saying that Elon Musk owns over $5 billion in Bitcoin through Tesla and SpaceX. And that's something he tweeted out. And here it is. Elon Musk didn't stop with Tesla. I understand that SpaceX owns Bitcoin on its balance sheet. Elon Musk owns over $5 billion in Bitcoin via Tesla, SpaceX, and personally. So Elon Musk has a bag as well. I know he's always talking about Doge, but look at what he's keeping on his company's balance sheet and what he's keeping for himself, right? I know he also has he gifted his sons Doge for them to play around with, and they have a Dogecoin miner, which is basically a Litecoin miner. But yeah, look at what they're doing, not what they're saying. All right, no living person has done more to protect the planet against climate change. So I guess they're talking about in this article um, about the fact that Bitcoin is supposedly bad for the environment, but we've went over this several times, especially this past week, where I went over several articles where they talk about the fact that Bitcoin 90% of the time uses renewable energy. And if they're using quote unquote dirty energy, bad energy from like coal or natural gas, it's flare energy. It's excess, excess energy, energy that was going to be flared off or wasted anyway. So Bitcoin is able to use that energy arbitrage and basically get that energy at a cheap discount price. And the energy companies don't have to waste it, they get to sell it. All right. So it's a win win for everyone. Next, this is coming from Decrypt. Why staking and lending protocols are becoming popular with investors. It's pretty much self-explanatory. While institutional investors balk at Bitcoin's volatility, many have dived into staking and lending. Staking and lending services are offering more consistent yields than than holding currency alone, but it's still early days, and there are teething problems with hacks and bug fixes, and also impermanent loss when you're talking about DeFi and the yields that you could earn on DeFi platforms. So we have the impermanent loss as well. Staking, what is staking? If you don't know what staking is, it's a financial terms. Or I'm sorry, staking is a financial term that's fairly unique to the cryptocurrency markets. In a nutshell, as an investor, you agree to stump up the crypto you invest in a specific network to help the network validate transactions. In exchange for doing that, you earn rewards, typically in the form of said token. It should be said token. And it talks about proof of stake, blockchains, and things of that nature. And one of the drawbacks for proof of stake blockchains is the fact that when you're staking, due to the volatility of the cryptocurrency market itself, the prices can drop. Okay, and when the price drops, so does the value of your overall portfolio, especially if you have a lot in that particular token. But that's the name of the game, and sometimes you just got to ride it out, right? And while it's the price is down, maybe it's if you're dollar cost averaging, let's just take Cardano for instance. If you're a dollar cost averaging every week on Coinbase, for instance, now that they have it on Coinbase, and you're buying $50 worth of Cardano every single week, and this the peak of the bear market, and it's $5 per Cardano, and then all of a sudden it drops down 80% or so, or it drops back down to $1 or $1.50, whatever the case may be. During a bear market, you continually stack that $50 worth, and you're staking it at the same time. Then you're earning uh, Cardano coins on top of the ones that you already have, and you're getting more because now it costs less. So it's a give and take, so to speak. So they explain the good and the bad with the staking, and they also explain with the lending, you're putting your coins at risk with a third party, and this is why you don't keep all your eggs in one basket, so to speak. All right. While staking helps secure a network, lending allows investors to passively earn interest to help facilitate trading. And as reward, as rewards are paid out in the tokens of the network, a sudden drop. This was just talk about the sudden drop in the price values. Let me see. A sudden drop in the network's value means your assets value drops with it. If you decide to stake your coins in a network that gets hacked, the value of your investment could go down. Could also go down. And in the case of with DeFi protocols, we've seen, especially during the DeFi summer last year, a lot of different protocols were hacked, or some hackers not really got hacked, but they took advantage of the system and either minted more coins, or just they hacked it and stole a lot of coins as well. So you gotta be careful, especially when you're talking about DeFi protocols, and they're not only staking, but they're lending and borrowing and things of that nature. All right, but everyone wants some kind of yield. We're in a world right now where we're seeing negative yields, especially in Europe and in Asia. Now in the US, we have very, very low yield, damn near 0% yield, and you're not going to get anything from leaving your money in a bank account. So you might as well take the risk. And not financial advice. I'm taking the risk, and I'm using staking protocols. I'm trying out different things with yield farming. I do a weekly update with yield farming on Binance chain. So yeah, I've had a lot of impermanent loss, but again, it's all an experiment, testing these things out, and I'm going to see which one works better for me. All right, not financial advice again. Next, again, coming from Decrypt, this one is pretty funny. Monty Python's John Cleese sells the Brooklyn Bridge as an NFT. The world has gone the world has gone terminally insane, said Cleese. All right, so John Cleese is auctioning a digital iPad drawing. You can buy it now for the price of $69.3 million. Yes, that price does ring a bell. Cleese's foray into crypto appears to be tongue-in-cheek for now. So he's basically mocking this whole NFT craze and people selling his NFT for $69.3 million. And here is the drawing. This is in a thumbnail, of course, and this is the drawing right here of the Brooklyn Bridge. He has a bridge to sell. If you're willing to buy it, go ahead and give me your Ethereum for it. He's selling it on OpenSea. Crazy, 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 and it's just showing that we definitely are in a crazy NFT bubble right now. So get in where you can. And I also have NFTs as well on Rarible. All right. And next, Binance Smart Chain. Speaking about Binance Smart Chain and being hacked, right? Speaking about being hacked with these yield farming protocols, Binance Smart Chain's Turtledex rug pulls shortly after launch. All right. The file storage project has all the markings of a rug pull, but will investors be able to get their funds back? I don't think so. Turns out a turtle's arms are pretty long enough to pull a rug. Yesterday, March 19th, Binance Smart Chain file storage project Turtledex performed a rug pull exit scam, a colloquial term for when a project's developers drain the liquidity or stored funds invested by the protocol. Coming off a March 15th pre-sale round that raised 9,000 BNB tokens worth nearly $2.5 million, the team drained those funds from trading pools on Binance Smart Chain native decentralized exchanges PancakeSwap and ApeSwap. I never even really heard of an ApeSwap. Converted the liquidity to ETH and sent the funds to Binance Exchange wallets to be sold according to the Turtledex team wallet transactions. That's the cool thing about a blockchain. You can see the transactions and see where all the funds are going. But by that time, it's already been done. The crime has already been committed. So unless they leave some identifying documents on Binance, which you technically don't have to, right? You could withdraw up to 2 Bitcoin worth of funds without actually identifying yourself. And right now, 2 Bitcoin is almost 120 grand. So maybe they're doing it over a couple of days, have several different accounts set up, and they're able to withdraw that $2 million. So yeah, be careful out there. Invest in. It's a crazy world we live in. And yeah, let's talk about it in the comment section below. Smash up that like, hit that subscribe button, notification bell. And another one bites the dust, man. It's Sergeant Crypto, and I'm out. Peace.